Hey, this is Tuesday Tech Talk, and today we're going to quickly review the last few days in the market and then try to figure out what the market wants to do over the next couple of days. We'll look at some different indexes and some different industry groups and see if we can figure out where we might be able to make some money. Now, the first thing we're going to look at is if you go on the home page, you can click on here and come down to the market letter weekly, it says, okay? And what we do here is we give a review of the overall market, what happened last week. Basically, we had a pretty rough time. The Dow Jones was down about 5.7%. The big trouble was the trade wars with the tariff talks. We sold off sharply on Thursday and Friday. Took the Dow Jones down to about 23,533.20. That was down 5.7%. The Dow S&P was down about 6%. NASDAQ fell 6.5%. If you go on down here, you'll get the CTI, which we changed last week. CTI is a cyclical trend index. We actually reset it this past week because the Dow Jones made a new closing low below the February low. I'll go into that a little bit later on, but the CTI is now a -7. We're going to stay bearish probably for a few more weeks. Cycles A, B, C, and D are in bearish ground. Cycle E is now bullish. We also had the momentum index that slipped down 3 notches to a neutral +2. We had negative internal breadth in the market. AD line lost about 5,000 units on the NYSE. Sentiment actually came in a little bit. We're now in neutral +0. You'll get a list of all the different indicators that we look at to come up with that. And actually, if you go a little bit further down here, we're going to give you some of the a calendar of technical events. As you can see, probably 9 of the last 10 technical events in the Dow Jones have been bearish. That's not a sign that we're actually at a bottom yet. If you go on down a little bit further, you'll find some numbers to watch, which will find resistance areas and support areas. And at the bottom, you'll get a complete readout on all the different indicators we have on the momentum index and all the components that are also in the sentiment index. Okay, let's go to the top of the page over here now. Go back to the home page, and what I want you to take a look at it every night. We will put over here in the market indicators the S&P oscillator. Yesterday we had that 669 point rally. The S&P oscillator came up at a -1. Oversold still, even with that big rally yesterday. Now anything below -0.4 is it indicates that we're very oversold. We'll also get the market posture with the flipping of the CTI is bearish at -7. Then also right below we have the second opinion performance. If you'll click on market recap, this will give you a little chance to take a look at just a quick chart of all the different indicators. And what I wanted to show you over here, we keep track of a lot of the internal breadth readings in here. If you look at the NYSE AD line, this was the February bottom. We had some nice accumulation coming up here. Fell short of making a new high, and then we had this sell-off of the last 10 days or so. The NASDAQ actually made a new high, which was showing positive divergence in the broader market. And we actually made a new high on this NASDAQ advanced decline line, but it's also rolled over. You take a look down right just below that, you'll find the NYSE and NASDAQ new 52-week highs versus new 52-week lows. You'll see what's going on over here. You're still seeing an expansion in the number of new lows, which is the green line. That's showing that more stocks are still making bottoms. When you're having a healthy market, you're going to see it rising like this. You're going to see expansion in the number of new 52-week highs versus the new lows. Right at this stage, right now, we're still getting the expansion in the number of new lows on both the NASDAQ and the New York index. So kind of keep an eye on this. Once we see this turn around, and you'll see the blue line come up beyond these, you'll start to see maybe the market in a bottoming process. Again, we had this positive divergence in the NASDAQ, which caused us to reset our CTI going back to the February lows, but we'll talk a little bit more about that later on. And you go on down here, you can see some other components. Here's the CBO index put-call ratio. This is kind of a good contrarian indicator. When we see the thing get up here where everybody's buying puts, that's usually a sign that you might be at a market bottom. Here's the VIX. We look at this, anything over, generally if you get up here around 23, 24, 25, you start to think that maybe you're starting to see some risk coming off the market. You'll start to see some people coming in here around that level. Now here's the February low. We went up to 50 intraday, and we came back. You want to see this thing start to move down. If we get this thing back down here around 15, 16, it might be a sign that maybe we've put in a temporary bottom. We'll have to wait and see on that. All right, a couple of the other indicators that we look at. This is actually for the sentiment. Again, these are contrarian indicators. You can kind of go along in neutral territory, but when you get up here where you have a 66, 67, this is one of the highest levels of this indicator, which actually measures the percentage of bullish advisors that do newsletters. This was one of the highest levels that we had reached since 1987, and actually it was about February of 1987 that this hit that level. So when you reach these extreme levels like that, that's a red flag for you. Okay, just as over here, as you get down here, where only 11% of investment advisors were bearish on the market back at February 18th. That's an extreme level when you get under usually about 13.5. So again, you get two red flags on here on these sentiment indicators that you did reach extreme levels back in February. We'll have to see. I don't think we're going to hit that now because of last week, but that was just something that kind of cued us a little bit that we were going to. You may be in some trouble there, and actually the market letter was talking about that we had too much bullishness in the market for about 6 weeks before that February top. Okay, also you can find some money flow indexes down here. This shows the money going in and out of the equity markets, and also margin debt. So these are some of the things that we look at on the in the market recap. But I think it's something you probably should check out a couple times a week anyway. All right, next thing I want to try to do is look at a couple of the different indexes. Come up here on charts, click on that. And the first thing we're going to do is pull up the Dow Jones. Okay, Dow DJ.30 or dash 30, we'll pull this up. And what's important on this, if we come up here, you click on trend line. Well, also over here, I have the 50-day, the 100-day, and the 200-day moving average up. And what I want you to take a look at over here is this triangle pattern that the market was in, the Dow Jones was in over the last few days. Okay, we broke out of that pattern. Now, usually when you have a triangle like this, you're looking for a break above or below. We got the break below 2 solid days, came almost down to the 200-day moving average, and we had that big bounce yesterday. Today, we're kind of, the market's trading mixed. But you can see that the momentum indicator is measured by the 14-day RSI is down here. Let's see, we're about 32. That's starting to see we're still a little bit oversold on that. Anything below 30 is oversold. And I use the 30-day stochastic to see changes in the trend a little bit more. As long as it's below 50, you're still in a bearish trend, and we're somewhere down here around 10, 14 or something like that. So that's something we want to watch. Now this level up here, as you can see where this trend line comes up, it also kind of coincides with where the 50-day or the 100-day moving average is. So you have kind of a double resistance point at that level. So we want to watch that. That level is right around 24.7. That's where you're probably going to get resistance on this level. We could draw in a Fibonacci, but I don't want to do it right now. I want to see if this thing gets up a little higher, because we're still below the 50% retracement level on that. All right, let's take a look at the S&P 500. Put in SP and it should pop up for you. Here it is right here. Okay, we don't have the triangle pattern on this, but we do have a rising trend line that's going to come up here. As you can see, we broke below that rising trend line with this last week. The S&P 500 came right down to its 200-day moving average, which is right where it came to it back here in February. Before it bounced off of. That gave a lot of traders, it held that on Friday, and we were going to be positive on Monday. So that bounce brought in a lot of people off the sidelines for yesterday's selling. Yesterday was kind of a funny day. It was the third largest point gain in the Dow in history. But I think it was more a matter of there weren't any sellers out there. They kind of wanted to wait. I think a lot of people were short in here. I don't think it was a short covering rally yet. I just think some people that technically they saw this 200-day moving average hold, and they thought, okay, if the market's cheap, let's go in there and buy it. But the indicators are still negative. You can see the 14-day momentum indicators right here at about 39. It's going to have to get up here over 50 before you're starting to show more positive momentum. Again, I think the market was trading mixed today. Let's take a look at the NASDAQ. Pull that up. You can go COMP dash and COMP. Click on that. As you can see, this is one of the things that I want to talk about with the CTI. The Dow hadn't made a new high, but if you take a look at this pattern off of the February lows, you have higher highs and higher lows coming here with the NASDAQ. Now we've broken that pattern, which we're going to have to watch for it. We took out the 100-day moving average on Friday. We came above that on yesterday's rally. Today we were up a little bit. We didn't even get to the 50-day moving average, so we want to watch. That's going to be the next resistance point on that. The indicators are still bearish at this stage. Momentum's still bearish, but we'll kind of take a look at that. You see these little triangle patterns over here. These come up on the charts, and these are when a bullish over here or a bearish technical indicator or technical event happened, and you can pull on these. It'll tell you what happened. You got a price gap down. Here's a 21-day SMA slope turn down. We had MACD long term, which is more of an intermediate term trend follower. That turned bearish. You'll get an idea when you start seeing a bunch of these things popping up. That usually is a turning point in the market. And you'll also find that on the Technoscan reports. Okay, here's the next. We want to take a look at the Russell 2000. Put in RUS. Here we are, right here. RUT-X. Now you can see a little bit of again. We went below the 200 on the Russell Small Cap Index. However, then we started to make a series of higher highs and higher lows. But and we're actually still in that pattern until this level over here gets taken out. So we'll probably have to break about 1,500 on the Russell before we break that pattern. And then you kind of have to watch on this in the NASDAQ that we don't get a head and shoulders pattern performing. So in other words, if this comes up here and challenges that and rolls over, that could be a bearish pattern. You draw in a neckline, and that would probably take us down to around that 1350 level on the Russell, which would be pretty bearish. You'd get that by measuring the distance from the neckline to the head here. But that's something we just keep an eye on in the background. You still have the indicators are still down here, a little bit more bullish than some of the others. But we did clear above like the NASDAQ. We went above the 100-day moving average, which is constructive. Next resistance level will be this 50-day moving average up here around 1560, something like that. One more index I want to show you is the Philadelphia Semiconductor Index, because this had a big day yesterday. We were up, SOX -- X is it. We had also made a new high. This was the positive divergence we saw when we reset the CTI back to here. We made a new 52-week high in the Philadelphia Semiconductor Index. Yesterday we were up about 3.5%. Another big move, and we're back up above the 50-day moving average, which is a positive. So we want to keep an eye on that. It came down here. You could actually almost say we put in a double bottom on that. That's a technical pattern that if that holds, that could be a point or some technicians and traders will look at that and say, I'll take a chance on this thing. We hit the 100-day, and we also performed a double bottom. That's two positive developments in that index. And if we get that leadership going forward from the technology that we've had, that's bullish for the broader market. That and the small caps leading. So those are a couple of things we want to take a look at. The next thing you want to do if you're sitting here with some money on the sidelines, trying to figure out where you want to go. We can go up here to the industries. If you click on that, what we're going to try to do is we're going to give you a list of 91 different industries that we follow. And what we want to try to do is we're going to look at the relative strength. The relative strength is going to show you how that industry over here is performing versus the S&P 500. Okay, you have a 119. That means that the semiconductors are outperforming the S&P 500 by 19% currently over the last 50 days. You have medical supplies, internet software, communications, that type of thing. We'll also give you the condition. We want to see if you get strong and you're outperforming the S&P 500. These are the indicators, or these are the industries that you want to take a look at. If you roll your mouse over these things, you'll get a graph of how that industry is versus the S&P 500. You can see this big move up here in the semiconductors. They outperformed. If you decide you want to take a look at some oversold semiconductors, click on that group. You can come back over here to the, you'll dig in here a little bit longer. We're going to list all the stocks for you. What you'll end up getting here is the strongest stocks in the strongest sector, strongest industries, and that's probably the way you're going to make the most money. Okay, you come over here, all these stocks that are rated 0 on the score. We have ON Semiconductor, Micron, Intel. Intel's got a great looking chart. You can roll over these things on the symbol, and you'll see this chart. Here's Intel making new highs. It may have made a new high yesterday again. We had a lot of upgrades on that. Go over here to ON Semiconductor. Another low price making a new high. Great looking charts. They've had a little bit of a pullback. These are where you're going to see the money coming in. Then you go up here, you can see Cree, Applied Materials. Take a look at the chart real quickly. If you want to dig in a little bit more, say on Xilinx or something here, click on that. We're going to go over to the second opinion. We're long. It's got a -2 because of that pullback, and you get a couple of different charts over here. Here's a shorter term chart. You can see we came down here, tested the 50-day moving average. We bounced off of that. That's a bullish sign. The traders are going to look at that. All right, now we're going to look over here, some of the trading activities. Going to give you the recommendation, the comments, and this will give you some of the ideas where you want to go. Now, one other thing, if you're looking for some ideas in here, not only do you want to look at the relative strength on the industry groups, but if you come in here and look at the ETF section, what I like to do is I'll click on the one week percent change. All right, now what you're going to get here, you can kind of ignore the leveraged things over here at this point. But what I want to know is when this last pullback came down, where was the money going? You get a 4.5% move in one week on technology and financials, and both of these groups were up huge yesterday. That's where the big money went. That's not mom and pop buying a couple tech stocks or a couple banks. You get a move like this where you're up 3.5–4% in a sector in a day. That was big institutional money coming in there. So they bought technology, they bought financials, the growth large cap. You saw that. That was the NASDAQ 100 actually, yes, which comprises of a lot of the big cap tech stocks. That was actually the leading performer yesterday. It was up 3.8% or something like that. And here you have the blend small cap, part of the Russell 2000. Again, 3% over the last week. A couple more of the different sectors you want to look at, and you also get a spot on that. So not only do you want to look at that the industry group, and you saw several different technology groups. Now you come over here, look at the ETF, and guess what? Where was the big money going on yesterday's rally? It was going to technology and financials. And you go back into the industry. I'm just going to run back there right now again. Oops. Click that out. And again, here we have internet financial. So this may be one. This was where the institutional money was coming. Let's go down here. We'll take a look. You have Charles Schwab. You have the Street, E-Trade, TD Ameritrade. These companies don't have a lot of branch offices where they put a lot of money. The money when the interest rates go up, these are financial stocks that you want to buy. But also you had a lot of regional banks yesterday. They were up about 4%. A lot of places in the financials you want to go. Some of the insurance companies were up big yesterday. And these are some ideas that where you could go on the site to find some of the ideas. Okay, one more time I want to go back to the home section. If we're looking to find some different trading ideas. If you pause down, or you roll down here, scroll down here, each Tuesday afternoon, we put up 3 Dr. Market Edge Talk stocks. We'll pick out 3 different stocks that were in the news. Usually it's out of Barron's or something like that, where somebody was upgraded something or downgraded something. And then what we want to do is, I'll look at HD Supply Holdings here. And what we want to do is we want to take a look at some of the stuff that we actually look at over here when the computer models are trying to go in. We give a little short write-up, and then we talk about the second opinion. Okay, it's HD Supply, HDS, was downgraded on February 14th, just right after the rollover. It was at 36. Now we've got a little bit of a bounce. I think the stock was down on a big market yesterday. However, this was done last week. I'm sorry. Okay, but anyway, we had an avoid opinion. I noticed the stock's still trading at about 37, so it hasn't done much. But you'll get the comments on this report. You come on down, you'll get the whole second opinion report. And then we take a look at the chart. We pull the chart up on it because not only sometimes when you look at a second opinion, a picture tells 1,000 words. You can come over here and we'll talk a little bit about what the thing's been doing. You'll get these little triangles here. You can see now we're starting to get some bullish recovery in this stock over here. We had a little bit of a double bottom. We talk about that. We'll talk a little bit about this resistance area up here at $40. It'll help you indicate what you might want to look at when you're looking at some of these charts. Look at a couple of the indicators, talk about that, and then we summarize it and say, okay, well, the technical conditions kind of a mixed bag. We have an avoid. However, you look at this, the connotation for some of the technical events is that we may have seen a bottom in this thing. We've broken above the 50-day moving average. 4 of the last 8 technical events were bullish. We pointed out the double bottom on that. If you were looking to buy HDS, you may want to put it in a stock watch list and wait for this thing to be upgraded. It looks like it's going to be upgraded to an early entry buy or long soon, and that would give you the confidence to know that if you're looking at this stock, give it a little bit more room over here. Maybe it's going to come down and test the 50-day moving average, and you'll have it in your stock watch list when you're going to get a buy. To boot, if you also would put that into a stock watch list as a potential buy candidate, well, you will get an email that night, the day that we upgrade it to an early entry buy or a long opinion, so you'll know the next morning that will be a buy candidate for you. Okay, that's going to be about it for this week. If you have any questions for next week, you can send them in before Monday at the close, and we'll try to talk about some different indicators. And with that, we'll wrap it up, and we'll talk to you next week.